Bitcoin trend analysis. January 18th, 2026, Sunday. The market is holding its breath in a state of extreme and deceptive calm. The violent, chaotic war for liquidity that has defined the new year has ground to a halt, plunging the market into a state of profound compression. This is a quiet before the storm. The final calm as the market coils with immense potential energy for its next major, violent move. Looking back, the start of January has been a brutal landscape of failed trends and vicious chop. This is perfectly captured by the predictive indicator above the price, which has painted a series of violent V-shaped reversals. Brief and hopeful blue ascents, marked by long signals, have been systematically and repeatedly crushed by sharp yellow descents and quick, close signals. Now, as the weekend continues, another fragile long signal has appeared, but it is a weak and unconfirmed sign in a market that has repeatedly punished early buyers. Today, Sunday, January 18th, the session is defined by this extreme compression. The price is locked in a razor-thin range, fused directly to the white moving average around the 95,300 level. It is being squeezed tightly between the upper red and lower green Bollinger Bands, a classic sign of immense energy being built up before an explosive price expansion. The liquidation heat map provides a chillingly clear picture of this war. The price is not just in a range. It is trapped inside a massive, bright yellow band of liquidity that stretches between 94,690 and 95,690. This is a major high-volume node, a true battleground fortress that must be decisively broken for a new trend to begin. The next major upside target, a cluster of short liquidations, sits near 96,689, while the next major pool of long liquidations waits below 93,691. The volume speaks with profound silence. The massive purple spikes that defined the recent conflict have vanished, replaced by a weekend whisper so quiet it confirms that both armies are waiting for a catalyst to initiate the next major battle. The best trading strategy in this environment is one of extreme patience. Trading inside this high-liquidity fortress is a low-probability gamble. The highest probability play is to wait for a confirmed, high-volume breakout that escapes this zone. The probability of a sustained trend emerging from this exact spot is low, but the probability of a violent breakout is exceptionally high. The multiple failed rallies give a slight edge to the bears, but the market is in a state of pure neutrality, waiting for a definitive move. Condition for continuation. For a new bull trend to be born, the bulls must force a decisive high-volume breakout above the liquidity fortress, specifically shattering the 95,690 ceiling. This would validate the new blue signal, confirm the reversal, and likely trigger a swift and significant percentage rally towards a 96,689 level and beyond. Condition for reversal. If this bottoming attempt fails and the price breaks down below the liquidity floor at 94,690 on a surge of selling volume, it would invalidate the nascent bullish signal. This would indicate that the recent stability was merely a pause for sellers to reload, and the larger downtrend that has defined January is likely to resume with another punishing leg down towards a 93,691 support. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.